Hey members, how you doing? Hope you're having a nice weekend. Really interesting week last week. Last Wednesday and Thursday saw a lot of selling, a lot of volatility, some really big down days. We kind of dug in Friday around the levels you see here, close to the 200-day and a lot of the major U.S. indexes. So it'll be interesting to see next week. Do we kind of dig in and bounce from here, or does the selling continue? So I'm not sure what's going to happen, but we'll look at the last couple tops here in this video to kind of show what played out there. It's not a predictor. Markets don't follow a script, but we can kind of look at what happened in the past to compare that to where we are currently. But for the portfolio, for me, it was kind of more the same. The last few weeks really just been a gradual shift to cash as positions have got stopped out. Here's all the alerted trades from last week. TDOC, that was a nice trade for us. We sold that last portion there for 88% gain. We had a 14% and 55% partial gains on that position, all out of it now. It broke those key levels we talked about last week, so no reason to hold it anymore. And then RP, NTR, NXN, AER, MPC, all of those stopped out for losses, between 7%. So again, it's kind of been what's going on the last few weeks for me. Just a lot of stops being hit. And as you can see, here's the open positions down to not many for me. Typically, I would have 20 plus sometimes with the way I size positions, but we're down to not too many here. And we're down to we have a large cash position now, 70+% in cash. So looking forward to finding opportunities to put that to work, but not going to be in a big rush to do so. I talked about maybe taking a trade on Friday in like a QQQ is the one I highlighted on the Thursday night note. Leverage thinking we get a bounce, and we kind of got that bounce to open the day. And I just never really felt quite comfortable putting that trade on. So just kind of patiently waiting, seeing what kind of setups develop. So let's look at the major index. Here's SPY, S&P 500 ETF. You could see Thursday it it kind of started to dig in around these lows from the summer. It's closed about right at the 200-day moving average. So this is fine. We'll see if we can hold this level and start to bounce next week. What I'm always looking for is the strength of the bounce. Once we get back, to 280, or even if we're, fortunate enough to get back to this 285 from the January highs and that big level that we cracked through last week, is there going to be a lot of selling here? I don't know what's going to happen, but I would think there might be. So if that's the case and we start bouncing a little, make a lower high and then start coming down and make a series of lower highs, that would mean to me that maybe in the bigger picture, the trend is changing. Right now, I can't say that with certainty. It's kind of just wait and see for me to see what happens. But that's definitely a possibility. But it's also a possibility maybe we do what we did, last February and April. It was looking pretty, we were around here in April. It wasn't looking too good. We made the lower high here in March, came down another lower high, but we held that 200-day, and then things got pretty good from there. So you just don't know. But I did want to take a look at a couple other market. This is a chart I'll bring up occasionally with, the gap PE ratios of the S&P 500. You can see we're still well above where we would be trading at a PE of 20. We're about 13 to 15% above that. We're about 50% of where we'd be trading at a PE of 15. So very fairly valued, quote unquote, to say this market, but it's been that way for a long time. This isn't a trading signal. If you traded on this, you would have missed out on all the gains from 2017, 2018. But just important to keep in mind. And then I like to point out this unemployment rate now. I saw now we're at the lowest rate since I think it was like 1969 or something. I think when they last announced it. But as this starts to creep up, in the past, that signaled the last two major tops in the market. So just keep an eye here. We're still trending down. It's not picking up yet. But if we start to pick up in the unemployment rate, this pink line here is the 1 year or 12-month moving average. If that's kind of starts to flatten out and we get beneath that, maybe we'd have a lot farther down to go. Again, you just don't know, but something to keep in mind, especially if you're trying to get cute, trying to pick a bottom. Maybe this is something bigger here. Here's this price to sales ratio. I like to look at this versus price earnings. Sales are a lot more straightforward. You don't have to worry about buybacks or any things like that, or artificial kind of ways to change the ratio. This is just price to sales. So this is at 2.14, and the median from going back to 2001 1, I believe this goes back to, is 1.46. So we're almost 50%, 45% or so above the median there. So again, a very fairly quote unquote valued market. But again, it's been that way for a long time. So let's look at the important stuff here, the charts. Here's the last 2 market tops. This is from the 2007 top, and you can see what happened before we topped out is we had a lot of volatility. We had a 10% drop in a month. All of a sudden we gained that back. We had a 10+% gain. We came back down, then we started making a lower high, came back down all the way here, made a lower high, lower high. So one thing that has preceded the major drops is a pickup in volatility. You can see that here. And another thing I wanted to point out is a flattening 200-day moving average. You can see it here. It's still going up here. Price undercuts it, but it's still trending up, still trending up. And then here it starts to flatten out. And that's kind of the last lower high. And then the markets went down, quite a bit there in the next couple of weeks. And then from then on, here is the this is the 2000 market top. And you can see, again, a lot of volatility, big gain, quick, big drop, 10% plus gain, 10% drop, some choppiness. Again, we got a lot of closes below the 200-day moving average. I know a lot of people point to that, but it's still trending up. It's still trending up, and then we had this consolidation right here, and you can see it. This blue line starts to flatten, and then it tanks below it pretty substantially, and then it comes back to kind of retest that, makes that lower high there. So that marked the top there in 2000. So compared to where we're at today, you can see we kind of undercut the 200-day here, but it was still rising. But there was that volatility back in January and February. So I was kind of cautious. I'd still, obviously I was still long, 80+% invested. But I was kind of keeping an eye on that, and it worked itself out. So obviously that could happen again. But what we have here this time, this is the 200-day moving average here, this dotted blue line. It's trending up, but it's starting to flatten out. And what's going to happen over the next couple weeks is this run here in January, because that's going to be about 200 days away. So all these prices here that are higher than current price in the next couple of weeks, those will be excluded. So if price keeps trading below those and those get excluded, that'll see a further flattening of the 200-day. So just something to keep in mind. Obviously, the most important thing isn't the 200-day or the volatility or things like that, because we've had the volatility here. So it's just going to see how we react, when we start bouncing, and are we going to take out these lows? That would be a very bearish sign if we took out the lows from last week. So Dow Jones, similar look, kind of holding in there right about the 200-day, kind of digging in right around those summer highs there in June, just below it. So we'll keep an eye on that next week. Small caps look really bad. We had that failed breakout above that 170 area here. This is IWM. The old highs from January and March looked like a pretty obvious place to potentially find support around 160. It was also the 200-day. It did not find support there. It sliced right through it like a knife, and then traded down Thursday and then Friday. While some of the other major indexes experienced a pretty nice bounce, this one didn't hardly move. So small caps look pretty bad. Semiconductors, we got that little bounce Friday, but I'll zoom out to the weekly here. We had that consolidation pattern that I've been highlighting the last few weeks. We just broke right out below that. So maybe we might get a little bit of bounce, but this looks like trouble here for the semiconductors unless they could really get an aggressive up move. Emerging markets, I cover this chart, more of the same, not much to say. Downtrend since the beginning of the year, clearly. Here's the All World ex-US ETF. Most of the strength has been in the US markets all year. You can see here, this has been in a downtrend since January as well. Made some new 52-week lows last week. So not much there. I wanted to point out a JPM's chart. This one, they announced earnings Friday morning. It started to perk up a little bit in the morning, and then as the day went on, it really didn't do anything. It ended up losing 1%. Just a really ugly chart here. If it starts getting back to the 113, 110 area, there might be a lot of overhead here. This is a big time bank. This is a really important company, and it does not have a very good looking chart right here. So not very bullish in my opinion. And it'll be interesting as more companies start to report earnings over, this week and the following weeks, to see what those reactions will be. Historically, especially the last couple of years in general, reactions to earnings announcements, I'm putting a broad blanket over this, but they've been pretty positive. But based on what we saw in JP Morgan, this big time company on Friday, did not have a very good reaction to the report. Amazon, this is a chart we looked at last week, kind of looked like it might be in trouble. And it was. It had that big down day along with the market last Wednesday. Got a little bounce Friday, up 4%, but we'll see what happens if that bounce continues into this week. If it gets back up to this 1900 level or so, there might be some overhead here, and it might attract some. There might be some sellers waiting to sell up there, driving price lower. So we'll see. Big time important company along with J.P. Morgan. So we'll be keeping an eye on those, and just financials in general look really ugly. Here's XLF. Maybe it digs in here around this 26 from the summer lows. But again, all these big ugly bars here, I would have to think, I could be wrong, if we start creeping up a bit, we might see some more selling as prices come up into former these overhead areas. So let's look at my open positions here. So USM, it's a newer buy, holding up really nice. This is the one I pulled up the monthly chart last time. You kind of see how it broke out of this trend line here on the monthly, and now it's above this horizontal level here around $46. So I really like what I see here on USM. It showed some great strength last week. I had the big down day on Thursday, but then Friday kind of went right back up, and it's still sitting right around those highs. So I like what I see out of USM. So far on the trade, I'm up about 4.6%. I bought it October 5th. CME, I like what I see here. Obviously, got hurt a little bit late last week along with the market, but it's still holding this key level, 170, just above 170. So I'll give this one some time to develop. Looking good. Earnings are coming up 10/25, so still have a solid week. So we'll see how it trades. But as a reminder, I typically do not like to carry a full position into an earnings announcement. If we're fortunate enough here to get a bounce, I'll take some off the table for some gains, this week. And then if it's looking solid technically, I will, if I have a 5 to 10% unrealized gains in the remaining shares, I'll cut my position in half, typically, and then we'll hold that through earnings. But I don't like to hold the full position through earnings. So keep an eye on these dates up here. Allison Transmissions. Yeah, not a very good last couple weeks. We sold here. This is just a small position. So this is the position, we sold for 5.8% gains and 8% gains earlier. So a little bit more patient now with this small position. Still have a while to earnings, 10/29, and it's still, bigger picture looks fine. I don't like this action here. If I had a fuller position, I would have sold on the break of this pattern here around 51.50. But bigger picture, we pull back to the weekly chart. It's still in an uptrend. I think there's a lot of demand for this name. So with my small position size, I'm going to be patient with this and see how it plays out. NTR still have a portion of this position, and it's coming back here to this big area that got us to buy originally here. It's $54 was resistance here and here, came back, support. So it's sitting right there. Earnings 10/25. So maybe next week it digs in here and makes a move up. We'll see what happens if it can get back to this 58. That's was looking like, to me, it was going to break out there, and then it just kind of pooped out there and had a couple rough days. So we'll see if it digs in here. If it doesn't, if it gets under this yellow box, I'll be selling pretty quick in NTR. EMR, this is one I'm using a bit of discretion. It's trading just under my stop here. I'm kind of waiting to see how it reacts, but it does have the 74 area that was, resistance here in the winter, and again in the spring, summer, and it cracked through that last week. So I'd like to see it reclaim that area pretty quickly to start looking healthy again. But the reason I'm hanging here is this trend line here lines up with this 200-day, and then there's this cluster of shares, this mini breakout area here that kind of acted as support Thursday. So if it gets under those lows from last week, I'm out for sure. But for now, we'll see if we can get a little bounce early next week. Earnings aren't for a while. So we'll see how this one plays out. This is EMR. We'll see if it gets under 70, we'll call it 70, 75 or so, that's where I'd get out. But for right now, we'll see if it can dig in here. Maybe we can get a couple extra bucks out of it in the meantime. SM Energy continues to look strong, booked some partial profits in this one already, 7.4%. So have a half position here. Earnings 11.1. I like it as long as it can stay above this 28. Not a big fan of that action from Wednesday and Thursday. Gave a lot back, but big picture again, still in an uptrend, holding the key level. So we'll see what happens this week. HLX earnings are a little bit sooner. I really like this one as it broke above those highs there that was Tuesday, and then of course Wednesday the next day it was right back to where it was before the breakout, and then it's kind of hanging out right under that level. But technically, I think it looks solid. Still in an uptrend, kind of just in consolidation mode right here. So we'll see what next week brings. This is one that I did book partial profits of 8% already, so I'm carrying a half position. And with earnings on 10/22, I'll just be keeping an eye on it before that earnings announcement. If it can't crack above this 10, back above this 1040 level, say it's sitting here and earnings are tomorrow, I'd probably sell half and just have that little position left, that quarter position. But we have some time left, so we'll see how it plays out. CNC, again, earnings 10/23. This one is just, it doesn't look broken by any means. It's just kind of been consolidating sideways, slightly down. I'd like to see it break that to the upside sometime soon, especially with earnings on the horizon. But again, I have a small position here, CNC. I'm just down to a quarter of my position. I booked gains of 7% and 16% already on this one. So these just a small holding, technically still in a uptrend. Although this consolidation is taking a bit long, I'd like to see it dig in pretty soon. My stop here isn't too far below. It's about 132.75, but I get the feeling we'll have a decision to make before that would hit with the earnings coming up. So those are the open positions. A couple things on my watch list for next week. So I'll say that what's kind of nice about when the market kind of flushes like it did late last week is it really helps me clear out my watch list, because sometimes if so many things are looking good, you can get a lot of names on your watch list, which is a great problem to have. Don't get me wrong. But sometimes when we have a flush like last week, it's kind of nice just to relook at everything and just take a bunch of names off and clear everything out. You got some cash to work with. So it sounds kind of weird, but all this, like all the volatility and all that, my stops getting hit, I'm kind of excited. I like it. It's a challenge. The markets are a challenge, and I look forward to seeing what's going to happen next and participating. So here's some names I'm watching. This is an energy name, EGN. This was on my watch list when it hit the support here. I kind of wanted to see how it handled this consolidation. Never played it, broke above it. Now we're getting a retest here. So this one, if it can stay above, $78, $80, I kind of like it here. Earnings are a bit off, so still have a full month till that. So this is one that's high on my watch list for next week. Another one here is Edwards Life Sciences. This one is, had a huge sell-off here starting at the beginning of October. Now it's kind of bouncing here. It's kind of finding some support in this range, around 142 that acted as the highs back here in March and April, kind of chopped around here in August, September, had that huge breakout. So, maybe now if it wants to break above this range, we can, maybe fill in some of this area here towards those old highs. So just to trade, I would, if I did buy this now, I would definitely be selling some as it came into here, maybe this gap area, book some gains, and then just kind of see how it plays out, because there might be some sellers waiting up above. So that'd be more of a kind of a discretionary trade and not my typical trend following trade on that one. This one's been strong. I've been talked about this one last week as well. Held up really well with the sell-off last week in the markets. It broke out of that key area here above 42. It's holding that level well. So this is one I'm keeping an eye on for a buy. Earnings at the end of October. So if it can hold above 42, I like this one. I might like it even more if it can kind of maybe give another dollar back or so and start bouncing. Give me a little bit better risk reward with a stop under that yellow. But keeping an eye on that one. Another one I kind of like how it's setting up is Fossil. This one and Under Armour both have similar setups. So this one here, it's just been consolidating since the summer, just this orderly pullback, just this really series of, lower lows, lower highs, just really orderly. Still, here's the weekly chart. So it had this huge run all year. You can see here if I do from, about the beginning of 18, it had about a 323% gain. Wish I would have had that one. And now it's kind of just been gradually giving it back. So if it starts moving back up out of this pattern, that would get me interested in a buy. So what's the horizontal level I'd be looking at here? Probably, we'll call it here. Get over these lows from late August and middle of September, and which then acted as resistance here in October. So if it could push over that, maybe get about 23 bucks or so. Another thing to look at, it's not going to be a perfect line, but we have this downtrend line here. So if we could kind of push above this downtrend line and or that horizontal level is what I like to trade off of. Something that would indicate that this series of lower highs and lower lows is over. So it would have to break that pattern, which would get me interested in potentially buying this one with a fairly tight stop. So I'm going to keep with the action in the market lately. If I do take new long positions next week or maybe the next couple weeks, I'm going to tighten up a bit with my stops. Longtime members know I usually like to give them a lot of room, but that's because the market's been in a strong uptrend and the stocks I've been buying have been in strong uptrend. So I don't want to get, stopped out for, I'm not gonna put a 2% loss on my shares because I just like to give them a lot of room. There's that can definitely work, but for my style, I like to be a little bit more patient. But now that might be a little tougher. These uptrends aren't as defined. So I might get a little tighter with my stops as I alert trades. Here's Under Armour. I kind of like how this one's shaping up here. It's hitting this $19 area if I zoom out to the weekly even, and I can even extend that going back to these lows from 2017. So this is a big area. So I'd like to see Under Armour, move up out of this area. And I think that this one has a nice long potential. I could put a stop under here. It might take a little patience to play out. Earnings are 10:30, so I probably wouldn't go full size at this point with the position. But I think it has a good chance to potentially move up. And then, if I wanted a full position, if earnings were out of the way, I'd kind of want to see it similar to fossils, kind of break out of this pattern here with this downtrend, this consolidation. But this consolidation has been going on for a long time. June. It's I've been watching this one. I kept thinking it was almost ready, and it just hasn't been. But maybe this is the time here. Right at this 200-day, if it can dig in at this level, maybe it can take out some of these recent highs here. Semiconductor name here. This one's not the cleanest chart in the world, but I do kind of like here. It kind of worked on filling this gap, and now we're there. So if this could start pulling up, this would just be a trade idea. If it these old highs are about 15% above, I wouldn't count on getting all that, but you can maybe get a nice quick pop in this one if the market cooperates. So those are just a few names I'm looking at. The highest on my list here. I like how EGN's setting up a lot. And then some of the other ones like Fossil and UAA might require a little bit more patience. And then again, if things start coming, I didn't take the long trade here because I kind of was looking at it Friday, and I think the better opportunity maybe as we start filling in some of this area from the highs that we made a couple weeks back to the lows. If we start turning down against that, I think the trade might be this isn't a market call, but I think the better risk reward maybe as we start to fill some of that. This is the inverse QQQ 2x. Maybe as we start retesting this area here and we start moving up, I like that risk reward. So this would be a short play on the QQQ. So if prices start getting up and then they start turning back down, I think that might be a play that I consider. But still, there's more names on my watch list and a lot of other things I'm watching. But those are some of the ideas that are most likely to trigger early next week. I've given a lot of thought to gold and the gold miners. I think gold looks pretty good here. Silver looks pretty good. But the thing that troubles me about this, and I'll pull up a chart of GDX, which has just had that huge breakout, almost a kind of a inverse head and shoulders bottom here. Nice breakout. So I like this a lot. But, bigger picture, come out to the weekly. What kind of troubles me here is, say, this $21 area that was the lows here. you know, that I, I just don't like having that overhead above my trade there. So that's about 8%. So, if you want to take a trade and maybe have a nice quick gain, I like this. Maybe this is a bigger bottom. I don't know. But for me, I'd almost like to see it clear that and set up from there, then take this trade now. So I think I'm going to just watch gold and the miners from here. Nothing wrong with making that trade. I think the setup looks pretty good, and you can put your stop against the lows from the recent lows. But for now, I'm just gonna kind of watch that one and just kind of the markets in general. Like I said, I'm in no hurry. I have a bigger cash position. I kind of like being in this position. You can kind of be picky about what you choose to where you choose to put your money to work. So just gonna wait and see what happens next week. I don't have any control. Don't have any. You know, Markets don't really care what I think or what I say. So we'll just have to see what they do and react accordingly. So. Feel free to reach out if you have any questions. If you have any chart requests or questions about trades I'm making or trades you're considering, please reach out. That's what I'm here for. That's what CJ is here for. So we appreciate you guys being members and hope you have a great week. Talk to you soon.